And everybody, Sim Reazor with Revere Asset Management, just after 6 o'clock here on a Wednesday night. So very quickly, stock owners, marketers, I want to get into the sell-off here. I got some direction, I believe, for the markets I think you're going to really want to hear. But before we get started, listen, let's start with data market insight. Last week, I did this, my trading plan for 2022. You can find it if you go to Revere Asset, Daily Market Insight. This video builds. Okay, this video builds, this December 29th video builds on the podcast that we did on Friday. They're meant to be together. So market resolutions for 2022. And so it's a combination video. So if you want my entire trading plan and how I'm going to be trading in 2022 and the setups I'm going to be looking for, you just have to watch or listen to both sets of those videos. You can find them on podcast, Market Resolutions 2022. You can find it on the Google Play, the Apple iTunes Store, Revere Asset, Your Money, and then you can find it on Daily Market Insight. And if you have trouble with any of that, always, we're here for you. Just Tim at RevereAsset.com. You can call, let's see here, get my market energized. You can call 855 732-5932. If you want to talk to the folks that make the decisions for the portfolios, the buys, the sells, what goes on the watch list, Hunter, Alex, and Don. If you want to talk to America's fiduciary right here, Dan Stewart, Dan at RevereAsset.com. So real quick, and by the way, any want to become a client of the firm, want to explore how we do things, always reach out. We're here when you are available. So listen. Oh, and then listen, if you want to get a hold of me, a lot of people like to get a hold of me this way here on Twitter as well. And so, there's messages already there. So at TJ Reazor is how you do that. Feel free. My DMs are open. So some people, they don't prefer email because they think they're going to get spammed. We don't spam on our email. We never, ever do that. But if you are of the ilk that you like direct messaging and like the texting aspect, always feel free at TJ Reazor, and you don't even have to follow me. You can just leave a blank profile, and I tend to get back to folks really quickly. And by the way, people have sent a ton of emails lately. Thank you. I appreciate it. I am getting back to everybody that is done. So I just want to let people know how grateful me and Tanya truly are. So with that, let's do this. I have this set up here for a specific reason. So you're like, Tim, what is this chart we're looking at? It's SPX. So let me show you. Let me go time frame. And you can see I've got this set up here for 7/1/2015 to 10/1/2015. And what I want to show you is what a real market scare looks like, what a real sell-off looks like, okay? And so this, and this is specific, so specific because Danny and I actually were short the market starting the last couple weeks of July, and then we capitalized on this on the way down. And there were some things that led us to that. Now we never broke the 200-day here, but we did. You can see the moving average jumbled mess here. It wasn't stacked. You had closes below the 21, and you were just kind of not going anywhere. That's not enough reason to short, but we on its own. But there were some other things that in the other indices, and so we had a short position with a 2, or I think it was just a 2, maybe a 3 short ETF. Anyway, and you can see what happened here. But this is what really happens when you get these big sell-offs. And this actually turned out to be a Greek crisis, and there was China issues, and so a whole bunch of stuff going on. Anyway, but this day right here is interesting because it's Wednesday the 19th. And so the market had a Wednesday, a Thursday, the bad Friday, okay? And then Monday, the whole thing just fell apart. And you're like, Tim, what's so big about this? It doesn't look like a big dip. And just let me show you this. So from Wednesday, and so we'll do it here, down, I mean, at that point, that's 10%. Lickety split, and the market got limit down. You're like 10% in a couple of days. Geez, Tim, did you see March of 2020? I get it, but there wasn't a pandemic going on here. Okay, so to you, some folks, that's not a big deal. But this locked the market up for a bit, and then the markets progressed on, and then there was another shorting opportunity heading into start 2016. Anyway, I'm showing you this because this is what it looks like when you get when there's an imminent sell-off. And do I think that the start of a Fed-induced recession began today? There's a really good chance. Yeah. Do I think you're going to get this? I don't. I'd be surprised if we got this, but I want to show you what it looks like. And I reserve the right to be wrong. But if you have a bad Thursday going into the jobs report on Friday, and Friday turns out to look like this, Expect this on Sunday night, Monday into Tuesday. Expect that. But what I do think is going to happen, okay, is that tomorrow, towards by the end of the day, you kind of level out, potentially rally into the close and settle up for what is a wild card of a jobs report. Okay, and I'll get into that a little bit more. But again, I don't think that's going to happen. But if you get a Wednesday that looks like this, and a Thursday that looks like this, and a Friday that looks similar to this, expect this on Sunday and expect this on Sunday, Monday. That's easy because, well, that was just Monday. This is not the futures, and then Tuesday. Okay. Wanted to show you that because that gives you a little bit of perspective. So what we're going to do here is we're going to take off this time frame. We're going to see if I can do that. There we go. So let's go daily. 2 years is fine. And then we'll reset the charts here. So where are we in time and space on the daily chart? Is this really, really a big deal? And quite frankly, it's not. Let me get this on the futures. Let's see what the futures are doing right now. Yeah, futures are up. I'd be weary of an up open tomorrow. I really would. I think that gets sold off. So potentially don't bite. So look, you're gonna probably come rally up here to the 21, which is what, 40. Oh, I've got a little interface blocking my view down there. 4701. So yeah, it'll be real interesting to see if like you just rally up to that area. But let me show you something on this other chart here, this ATR chart, that is super interesting that you should know about. So here was the prior high, okay, to the recent low, and I ran the fib levels. I can't begin to tell you how many moves terminate at a 1272, which, by the way, close enough for government work up to the 2 ATR. To expect that it was going to be this huge sell-off that we did, no, you don't. But the Fed minutes, the Fed isn't your friend anymore. You got to realize that the Fed is not something that's going to save you right now. Right, wrong, or indifferent, they're going to tighten. They're going to get a handle on this, and they're going to try to get a handle on inflation. If it causes market sell-off, so be it. Okay, so you need to come to grips with that and understand that we're probably now in a sell the rips market with the NASDAQ until proven otherwise. And the S&Ps right now appear to be on the daily chart. This is, I mean, you're just below, you're holding above the -1 ATR. That's great. You're just a little shy of the mean here. This isn't really anything bad. Like the trend isn't broken, right? Like, let's not overreact. Let's look at a weekly chart here of the S&Ps. Like, you're just down to the 8, right? So where do I think you could head? I do believe that coming down here to the 45.62 level on S&P futures would not be a very bad thing at all. So you're like 45.62, wow, that's pretty far down here. Let's just call it 45.50. That would be normal, okay? Like 200, 250 point pullbacks are normal. And look how many times, you can go back to time memorial, look at where the 21 S&P 21 exponential moving average comes into play. You rarely break it on the S&P. I'd look to that for support, and I think that might be the direction you're heading to. Let's look at NQ. You don't have to. Let's look at NQ on the weekly time frame. You're there right now. Do I think it breaks it? It's hard to say. I mean, you've got all the big tech earnings. This, if you're, you know, for all the bearish folks out there, this might be just what the NASDAQ needed to reset potentially until after the tech earnings are done. And so tech earnings are about 2.5 weeks away. They start with Netflix, and, you know, we can say they end with Apple. You know, what about Tesla? Tesla's a little bit later in February. And so, yeah, I wouldn't get overly excited about the downside unless I saw a poor Thursday and a poor Friday. You're like, well, Tim, by then it's too late. No, it really isn't. But you need to honor your stops. Like I was having a discussion with some folks on Twitter, and they're so smart. Like these folks, the community that follows what we do at Revere, they're really smart, and they honor their stops. And they, you know, if you get stopped out, like if you have a stock that looks like this was not it, so I'm just using this as an example. You know, this is a weekly chart. Like, look, when it breaks to 21 on a weekly, look out below, right? This is Upstart. Down 10% today. Like, well, this doesn't look like a big move. Look at this from tip to stern. You know, 70% off the highs. Somebody rang the bell at 401, and if they're still holding, they're down 70%. It's nuts, right? If you're like, so where do you see 70%? That 69.34 number is the percentage. That's craziness, folks. And so you have to honor your stops. And like, well, where would you stop? Your stops be, look, my trading plan 2022 often is going to revolve around the weekly charts. Are you breaking the 21? You break the 21, you break the trend. Okay. And so that is a big deal. And you have to honor your stops in this market environment. And right now, the NASDAQ is honoring the weekly trend. And the S&Ps are doing what? They're honoring, by far, they're honoring the weekly trend. If I saw those break, I'm going to change my tune. But you have to, along the way, your stocks are, believe me, if they break that weekly trend, your stocks are most likely getting devastated, and you need to honor those. Well, will they bounce back? Well, I don't know if the ROKU, I want to look at this real quick. I don't know if they're going to bounce back, but everybody has a Roku. Yeah, they might. But I mean, this thing broke the trend. Look at this, 394. So we'll just do this math just real quick to give you some thought here. Look at this. Look at this. That's down 50% from when it broke the trend. And by the way, where did it ring the bell? At the 1272. That's a 1272 extension right there. That's nuts. So I just picked Roku literally because it's the only name that popped in my head. So you can do, there's a lot of things that can get you to sell, whether it's offensive or defensive, but honoring your stops is one of them. And if you're trading up the weeklies, stay on the weeklies. You trade on the dailies, stay on the dailies, right? It's really, you don't want to cross the streams like a Ghostbuster reference there. But, and if you're nervous, well, then you always can sell down to the sleeping point. They don't give you hero badges, because you stayed in the market. No. You need to be able to sleep at night. And you need rules that get you in and rules that get you out. Okay. And so there's a lot to digest with those sentences. We go on for days about those, but let's look here at TNX, because TNX is interesting to me. These are interest rates, right? So 10-year treasuries. I mean, this is a huge, colossal move to start the year. We've had 3 trading days, and the TNX is meandering, and it went and did this. But let's look at this on a weekly basis. What was TNX doing before it did this? Yeah, just consolidating, right? Consolidating where? Around the 21. Yeah, probing lower, but holding the, and now it's made this move. But what you need to see here is this. There's a daily chart now of TNX. You're up here at the 3rd ATR. Can TNX go higher? Yes, but is by probabilities. I'm a probabilistic trader. No, like it could do this. I would expect this. Maybe you could get this, and then maybe you get this, all higher till eventually it breaks. But to think that it's just going to keep going up like this is difficult. And the stocks that rely on that are what? The Goldmans, right? And the Goldmans didn't even get to the 3rd ATR, like your interest rate sensitive stocks, right? The Goldmans, let's look at BAC, and BAC got to the 3rd ATR. Okay, great. So what do you think is going to happen? Well, isn't it just going to go up for infinity and beyond? No. Look, this here gave you multiple times to get up before it gave it all back. You don't have to be a long-term investor. I think being a probabilistic trader, saying, hey, did we clear the 21? If we clear the 21, what are the chances we get up to that 2 or 3 ATR? And we've talked about, the people who have followed my work we have talked about that ad nauseum. And I've got links to videos and stuff that show you all about this. They're in the YouTube link tonight. They're in the email tonight. They've been in the email, the links that show you how to become more probabilistic with your mindset. And I think that's really going to help you in 2022. That's TNX. But just because TNX backs off, is the market saved? And I think this is the chart. This very last chart I'm about to show you is the one you really want to watch going into jobs report Friday. Why is that? The dollar. This thing is a serpent lying in wait. Okay. Now, typically, when the dollar surges, the market has struggled. Okay. And it has pulled back. And so, well, is that going to happen again? It happened enough in 2021 to make me point this out to you. I don't know if it's going to do it again, but the market is clear. It's just like, it's like the TNX to start the year, right? It's just lying in wait. And is it going to spike? And if the dollar spikes, is that a bad thing for buying power? No. If the dollar spikes, could it be a bad thing for markets? It could be. And so you want to be aware of this, where the dollar is in time and space. Well, the market sold off hard. The dollar didn't do anything. Dollar didn't do anything today. I got it. I got it, but it's something that I think you want to be paying attention to. Let's look here at 1110. I'm really curious now. So we're going to change this to SPY, and we'll just look at 1110. I am curious. I don't, because towards the end of the year it got goofy. So here's SPY on, oh, look at here, SPY on 11.9, 11.10 goes up, and then, and what was the dollar doing? It was down in here and it was rising up. So this is what I'm pointing out to you. So SPY on 11.10 is going up and then moves down. And then what was the dollar doing around 11.10? Setting up to go higher. And so is that going to be what happens again? I don't know, but it's something to look at. And well, what do you do with all this information? Like, Tim, you said, watch the dollar, look at these relationships. Well, they could be triggers. And so if you see the moon and the stars not aligning, but kind of breaking up, and there's cracks in the armor, right? So you've got a dollar that could surge higher. You've got the high valuation stocks punching lower. Is this the time that you want to bet the farm on, give me, what is a high value name here? Oh, snow. Let's look at snow. I literally have not looked at that. Yeah, is this the time you want to bet the farm on snow? No matter what you think of snow, right? Probably not. And so when the moon and the stars aren't aligning, and there's fissures and there's cracks in the armor, you want to be a little defensive. You want to maybe tighten up your stops. Potentially, you want to just kind of just lie in wait and see how this all shakes out. But like when you get the NASDAQ, let's look at QQQ. You get the NASDAQ, right? Clearing, had this rough August into September, clears to 21. This is where you want to be, right? You want to go find some of those names. And then like, look, Amazon's having a really rough go of it, AMZ, okay? But let's look at that September. Here's the October kind of clearing, and even Amazon, as much as it's struggled, when it clears the mean here at what is that? I'm sorry, I have the interface I use to create these videos is blocking price over here on the right hand side of your screen. 33.12 to 2 ATRs at 34.62. But look at what something a little bit better looking, like Tesla does when that happens. Tesla just trading, and right. Of course, it hit earnings there, but still, there's a lot of things that you can do when the moon and the stars are aligned. And right now, the two biggest indices, the S&Ps and the NASDAQ, they're not aligned. And that is trouble because 70 to 80% of all stocks follow the general market's trend. It's really hard to find those stocks that are going to buck the trend. And this is probably a time to be careful. So with that, listen, if you don't understand that, and that's not me being facetious one bit, just call. Here, let's get it back to just call 855-732-5932. And the thing that makes us better than every other strip mall advisor in the world is stripmalladvisor.com. Means that we are available to you and we answer to you and we talk to you, and whether you're a client or not. And that is something that you won't find at other shops. So hopefully this all helps, and hopefully you keep. We had a really good year content wise, and I can't thank you enough, everyone who watches what we produce. Thank you. It means the world to us. And so listen, there's a lot going on here. So maybe just take it slow to start. Dealing with that. I hope you have a great night, and I will see you. We'll have the Friday podcast, so I'll see you on Friday with my next update.